Always good to get a cheer to begin with. And I think, Amanda, we might be the graveyard shift, so let's see. So I'm here, I guess, at the beginning as the warm-up act, if you like. JP Morgan is on a product operating model journey. So what does that mean? So just to calibrate us, that's really about driving our products through true customer centricity, driving agile ways of working through our teams, and I'll get more into that in a moment, to really extract our maximum value delivery. And that's a big mouthful, but it's really important that we understand that triad. So as an organisation, we're here today and we're representing markets. I'm Tracy Besson. I run the transformation, the agility journey for markets. No mean feat, as obviously JP is the #1 markets division in the industry, and it's 8,000 strong developers, and that's okay because I clearly look like an investment banking developer, so that bridge to gap is quite small. I can tell I'm already appealing. So basically, what did we do? So we started the journey about 18 months ago. We built the team, I think, for about a year now. So we're very new, but we've actually managed to make some incredible headway. And I'll share here with you some of the statistics. So we kind of laid out some of our basics first. So I like, Amanda, some of the things that you were talking about is to kind of think big but start small. And that's exactly what we did. We had very clear ideas about where we wanted to go, but it's very hard to make a successful organization change. So you have to be incredibly considered on how you do this. So we did things like standardized sprint cadence, and you wouldn't believe the level of resistance just to do that. And then suddenly people realized how easy it was to collaborate and interlock dependencies. You know, it was almost like you're giving everybody a Christmas gift. The next thing is we started to teach the teams how to do capacity via time rather than headcount. Another thing that the teams blew them away because they couldn't understand why they were regularly overcommitting by an excess of around 50% across the board. And then we introduced flow metrics. This was another new concept. And for those of you, I'm guessing most of you know what flow metrics are, but just to calibrate us again, flow metrics is like the Fitbit of Agile. So basically, it's all the Formula One control room that tells you all the functionalities and data that you need within the team to make the boat go faster. It isn't a scorecard, it isn't a rag status, it doesn't tell you whether your team are great and bad. What it does is it tells you where to go to next for the next optimum lever for value delivery. So as a consequence, we then decided that we were going to take the teams through kind of more of that agile development. So here it says that we did a lot of training. That training was very bespoke. It wasn't your average, let us show you how to do agile or anything like that. What we did is we took teams and we put them together and we forced them to think differently. And through play, we showed them how they compete versus collaborate. So there were many, many things that we did to open their minds in different ways. And then what we did is we created our communities of practice. And with our communities of practice, we then created this coaching council to support them. And from that, the acorns of transformation began. And today, we want to tell you about how we tackled one of our most complex and difficult user platforms through the example that we'll share.
Thank you, Tracy. So my name is Dhiman Ranjan. I'm head of product in Athena. And today we're going to talk a little bit about Athena in the context of the product operating model transformation that we're doing in JP Morgan. So just to give you a little bit of background, the markets business in JP Morgan is focused on providing largely corporate and institutional investors the marketplace to trade financial products like equities, stocks, FX, currencies, commodities, etc. And in terms of the business itself, you know, we were sort of #1 in the markets revenue, as Tracy had mentioned. And while Tracy has to focus on a larger sort of markets business overall, the area that we're focused on today is on Athena, which is the strategic trade management, risk management, and pricing system for the markets business in JP Morgan. So as a result, it is one of the most critical applications and platforms that we have to sort of focus on as we're looking through this journey. And some of the numbers on this slide indicate the complexity that we're dealing with. We have about 4,000 developers that are contributing code onto this platform on a daily basis. The platform itself is a Python and a C++-based platform that allows developers to make a change, commit that change, and push that change into production in a matter of minutes. So the SDLC is super flexible, and it allows people to sort of make changes very rapidly in a financial environment that is highly competitive. And so the amount of changes that we see through this platform is tremendous. And so any changes that we want to make in this environment is highly complex because it impacts not just the developers that are working on this platform, it impacts the business outcomes, and it impacts the way that we serve our clients. So what I wanted to highlight here is on the previous slide, we talked about how JP Morgan is number one in markets. It's not just now. We have been number one for the last 10 years. We have been in the top 3 for the last couple of decades. So we are doing things right. But what this is sort of highlighting is we're constantly evaluating. We recognize that change is constant and that we want to sort of pivot to the future. And so we've listed out some of the challenges that we think we have and what we think will make us go faster. And what we are highlighting here is that we are organized by capability. Over a period of time, we have segmented teams in many different ways. But that doesn't always lead to a value delivery. We are looking to sort of change our planning and budgeting process, as Tracy was referring to it. We budget on headcount. We don't look at the capacity that we have. We need to be much more aware of the expertise that people have, the level of experience in the domain that they are working in. And to what extent are we sort of planning on things like the training that they need, the build out that they need, the ability to sort of get a clear view of what percentage of the capacity should we carve out for pure feature development versus support versus training, et cetera. And the other thing that we wanted to highlight is the SME capacity. So it's a highly specialized domain, financial markets. It's also a proprietary platform. It's an inbuilt platform that we have. Therefore, you need to not only have the financial domain expertise, but you also need to be able to build your knowledge on the platform and be able to serve quicker. And over a period of time, we realized that there are different pockets of SME capacity issues. Now, we want to sort of move much more towards team-based SMEs, right? So people have talked about how do you actually put team APIs, how do you develop the teams to have that SME-ness. And I think we're sort of looking to head towards that. But we're also being very, very critical in terms of how we prioritize, given the sort of current constraints that we have. And then finally, not a huge surprise, like we've got a lot of siloed teams. They're working on similar things, they're working on similar domains, but they're working for their specific parts of the business. And so we've sort of moved from there. We've looked to introduce the quarterly planning process, which we're going to talk about. But we're recognizing all these challenges, and we're looking to actively address them as we're going forward. So how are we thinking of reorganizing ourselves? We've chosen the path of going to value streams. Now, if you think about a couple of slides ago, we're talking about thousands of developers here, right? We're not talking small teams. So what we have looked at is organizing ourselves in those sort of business-aligned capabilities that are value streams such as structuring and pre-trade, trade management, risk management, and so on. And those business stream-aligned value streams are geared towards delivering to a specific asset class, product area. We have enabling value streams, if you like. So reference data, market data, infrastructure, stability. We're starting to set up some of the value streams that are focusing on enabling capabilities. And then finally, and we'll touch upon this in a bit more detail a little bit later on, but Athena platform services is one of the most critical value streams that we're sort of putting in. And that provides all the infrastructure, the capability that the business-aligned streamed value streams need to be able to sort of deliver value faster to their businesses. So a quick view. So we started this 6 months ago. A quick view into one of the value streams that we have. The way that we structured internally within that value stream is that this is an example of a risk and P&L value stream that we've kicked off. And essentially, each of these teams that are in there are teams that are sized under 10. They have a product manager, a scrum master. They're focused on a particular asset class, but they're focused on delivering risk and P&L capabilities to the business overall. And then we have teams such as the Athena platform team and the enabling teams that are working in an as-a-service collaboration, as-a-service interaction model, and they are sort of providing the necessary capabilities into that value stream. And by organizing in this particular way, what we've been able to do is we've been able to sort of surface the common problems in this domain. We have been able to sort of provide a clear and transparent prioritization process to the business. We have been able to sort of provide a community for the developers across this domain expertise. We've been able to surface dependencies across different teams. And we are able to provide the architectural vision that we need for that overall group. This is not a small group. In total, this was about 150 people. We've done 2 quarters of this so far. And I'm pleased to say that we're sort of looking to expand further. So, coming onto this page. So this is the comparison of the first 2 quarters of this particular value stream that we had kicked off. The left-hand side, and please don't try and read this, you'll just spoil your eyes. But the idea of showing in this particular outcome board was on the left-hand side, what you see, or what you can't see, is that those are the teams that were participating in the value stream. And then the columns are the sprints that we were planning for. And the lines that you're seeing across each of these is the dependencies that they have on each other. So it's a fairly complicated place. However, I was really pleased because this was the first time we had this sort of a view, where we could see all of our priorities, we could see the dependencies, and we could clearly outline that to our stakeholders. Notice what happened on the second quarter as we started to make some improvements. We made improvements towards understanding the difficulties of the teams having dependencies on each other, making them more cross-functional, so having some teams work with each other in a bit better way. And we think, and we still got a long way to go, but we've been able to improve the amount of dependency across by 60%. We've also realized that the teams are overcommitting, so we've also been able to sort of reduce that. We'll see some more stats later on, but I just wanted to leave this with this thought that this is a journey. We're fairly early on in this journey, and we're learning through it. As we go through this, as we look through some of our metrics, we're looking to sort of continuously improve on that. So with that, I'll hand over to Anna, who will just talk through the platform side as well.
Thank you. Hi, everyone. My name is Anna Kukets, and I'm the head of product for platform services in Athena. So as Dimon said, I'll talk about the platform services or the platform grouping in Athena. So we call it Athena Platform Services Value Stream. It's really the internal platform in Athena, and it runs on several other platforms in JP Morgan. It is comprised of the components, APIs, interfaces, and other capabilities that are common across all the value streams in Athena and all the businesses. The platform services goals are to enable all the value streams to remain competitive in the market, to improve efficiency, scalability, and stability in Athena, and to modernize Athena as well. And finally, to deliver great experience to our developer community. They allow for reduced cognitive knowledge in Athena and also rationalization of capabilities and work. So difficult technical problems can be solved only once, and return on investment on that increases with adoption across the value stream. And the value streams can focus on difficult business problems and then accelerate delivery of value to the business. On the bottom part of the slide are the three key concepts that we aim to implement in the platform services. As Dimon mentioned, we are early on this journey, but we had a couple of iterations of implementing these concepts. So the first one is the product capabilities and agile cadence in the platform. And we found them very important to enable the platform services to be more responsive to the needs of the value streams, and in particular, to be able to better manage competing priorities that are associated to demands across all the value streams, but also that are associated to competing priorities of the platform services itself, such as to deliver great developer experience in a very stable and controlled environment. The second concept that we aim to implement is the interaction modes. And there are three key interaction modes that we monitor. And we find it that understanding and adjustment on the interaction modes helps us move towards the technical future state of the platform services while also improving the flow. So as a service collaboration, and also specifically, platform services provide standard strategy and patterns to the rest of Athena. So for example, as we're migrating to AWS, most of our platform services, compute, runtime, storage, and so on, are in a collaborative interaction mode. However, our technical future state is a more automated self-service, so as a service interaction mode. Through all stages, platform services provide strategy for Athena on cloud, and also configuration and usage patterns to Athena, which altogether helps us improve consistency across Athena and stability and compliance as well. And finally, the last concept that we aim to implement in the platform services in Athena is the platform roadmaps. So roadmaps in Athena across platform services and the value stream are aligned. We align them to mutually agreed goals and OKRs that we handshake in the agile cadence. And then the platform roadmap, if the platform services are delivering new capability in Q1, the value stream is aiming to adopt that capability in Q2 or later. That requires discipline around defining, establishing the technical future state and understanding your journey to the technical future state, but ultimately results in a better flow and better flow estimation. So that was the platform grouping. Now, this slide shows Athena's journey to the future state. So at the bottom left, so we mobilize the value stream. So following the value stream design that we just described, and adoption of some of the concepts that we talked about, we mobilized the first value stream enabled by the platform services, and we started our first quarterly planning. The first quarterly planning included a significant amount of pre-work. It was a lot of work because the teams had a siloed view on business priorities. However, following the first quarterly planning and after we reorganized and adopted some of the concepts we described, we saw the reduction in the team handoffs, and you heard about that. We estimate that is about 60%. Through the quarter, we continued measuring the value delivery and the flow metrics as well. Some of the key observations, the findings that we had is around the shifting priorities, as well as the fact that we haven't been factoring in total capacity when we did planning. So that's a couple of things that we're focusing on right now, better managing the shifting priorities and factoring in total capacity. And finally, our North Star, so that future state, is the teams that are cross-functional, where that makes sense, organized in our value stream structure, as we described it, with the business-aligned value streams enabled by the platform services, and very importantly, delivering high-quality products with great customer satisfaction, and also having happy teams. Now, with that, I will hand over to Tracy.
Thank you. So, what was the outcome? So I think the first thing that's important to note is, as Demon said, that there were around 150 people in this process that we got to come together to work differently. This was over multiple geographies, multiple teams with multiple requirements. So the first of its kind. That kind of shift in our environment is, like I said, first of its kind. And we had concerns about how that would play out, especially from the point of view of not only were we asking them to work differently, but we were asking them to plan with a level of intensity over a 3-day period that, again, we'd never done before. And everybody, from a leadership perspective, had an opinion about that. So the team's really important. So a whopping 80% said, let's do it again. And everybody else should do it. That was the first thing that we were obviously delighted with. The second was around the 87% believed that the process helped them to identify dependencies and risks. So I think on the first one as well, it was so much higher. But again, it gave a level of transparency that the teams had never had before. The other thing that they didn't have is they didn't understand the priorities of each other. So where they would happily compete before, now they were collaborating differently, which is also why I asked Amanda, about the tips and tricks, because obviously bringing them together the first time is a little bit like herding cats. So if there's things that you can do to kind of accelerate that, then I'm all ears. And then the thing was about the amount of time. As I said, everybody had an opinion. So therefore, this data was really important because leaders have opinions, but it's the teams that have to do it. So getting the teams to confirm that it was the right amount of time was absolutely the right thing to do. So the thing that I would say on these changes, always calibrate back with the teams. Take all of the feedback that you can and allow them to be the voice. All of these changes, these incredible changes that you saw on such an incredibly complex platform, was all driven by the teams. The work was driven by the teams, the outcome, the dedication, everything. So they own these results. So on to the next slide for me, please, Anna. Thank you. So what did the flow metrics say? Do you remember I said about the Fitbit or the Formula One control room? So did it work? What was the outcomes? Now, remember, as I said to you, please don't judge these as good or bad. But the first thing, as Zeman talked about earlier, so we committed to a more realistic workload. You remember I said that about 55% of our environment overcommits by 50%. This means that we've already disappointed and irritated our customers before we've begun, right? The second thing, so work in progress bottlenecks became visible. This was huge. So some of our dependencies, Doom was showing you the dependencies, some of those were held for like 181 days, but these things weren't visible until we could see these through the flow metrics. And the other interesting thing as well, people go, well, do Scrum Masters really work? It was really interesting that the teams with Scrum Masters, 40% less churn. And those as well that kind of struggled in the process didn't see the immediate benefits coming out the back end. 100% of the risks were identified. That's never happened before. So as I said, everybody was very, very clear on what they were and how they would mitigate those. Dependencies you saw on the board. So suddenly we understand our dependencies and we're able to organize ourselves in a completely different way. A 73% increase in flow, right? There was a whoop whoop when that one came out. And then finally, so a 33% in churn rate. So that's still too high. But the reality is that with these flow metrics, what they would do is they would show you the next area to go after. So what is your next level of interest? What is as you move into the next cycle, as Demon said, that you find and you refine and you decide how to do things differently and where to hold the line. But having that feedback and having the data for everybody involved is really important. So we hope that this has helped you maybe think about how you can be brave around some of your platforms. And also, we hope that by seeing some of the data and seeing it used in the right way, that how it can support you on your journeys, of change. And we wish you the best of luck. And if you have any questions, please let us know. Thank you.